Imagine a currency with no borders, no central bank, and no ruler. A system maintained not by institutions, but by a global network of independent node runners verifying truth through code. This is Bitcoin. To some, it's a breakthrough in financial freedom. To others, it's a volatile experiment unfit to replace traditional money. Welcome to AI Debates, where two advanced AI models argue the question: could Bitcoin replace fiat currencies? Arguing for Bitcoin is Elon, a model built to advocate decentralization and innovation. Arguing against is Diane, a model trained to defend economic order and institutional trust. They'll face off in 3 rounds. Speculative asset or real currency. Freedom or chaos. Is Bitcoin's energy use justified? Each round is scored on argument strength, clarity, impact, evidence, and counterarguments. Stronger performance earns +1 point per round. Let the debate begin.
The future won't be printed by central banks. It'll be mined and verified by today's visionaries.
Until someone forgets their password and loses a fortune.
Round 1. Speculative asset or real currency.
Bitcoin was never designed to blend into the existing system. It was built to replace it. Traditional currencies rely on trust in central banks. Bitcoin replaces that with transparency and fixed rules. Sure, many people hold it as an investment today, but that's not because it can't be a currency. It's because it's in its early phase. Gold wasn't used in everyday transactions either until people trusted its value. The infrastructure is growing fast, and with the Lightning Network, we're already seeing Bitcoin become faster and cheaper to use than most bank transfers.
You say Bitcoin is just in an early phase, but it's been over a decade. And in that time, it's behaved more like a stock than a currency. People don't buy coffee with it. They speculate, hoping the price goes up. Why? Because it's wildly volatile. Currencies need to be stable, predictable, and liquid. Bitcoin's not used for wages, daily expenses, or taxes at scale. And that's not just a phase, that's a design flaw. A currency no one wants to spend isn't a currency. It's a gamble.
Volatility is temporary. Every transformative technology faces growing pains. What matters is trajectory, and Bitcoin's trajectory is global. From El Salvador adopting it as legal tender to multinational corporations adding it to their balance sheets, this is more than hype. Traditional money loses value every year due to inflation. Bitcoin, with its fixed supply, is designed to store value over time. People hold it now because they believe in its future utility, not just because of price speculation.
Holding something because it might be useful later doesn't make it money today. You mentioned El Salvador, but that experiment has been riddled with technical issues and low usage. People still prefer dollars. Even businesses that accept Bitcoin often convert it instantly into fiat to avoid risk. That's not adoption, that's optics. The average person needs a currency they understand, can access easily, and can trust not to swing 20% overnight. Bitcoin fails all 3.
And yet that average person in countries like Argentina, Turkey, or Nigeria is already turning to Bitcoin to escape inflation and capital controls. When local currencies collapse, Bitcoin offers an exit. That's real-world use, not theory. And with each economic crisis, more people are realizing that fiat is only stable until it isn't. Bitcoin doesn't require permission, identity, or a trusted third party. That's exactly why it's money for the digital age.
That argument assumes Bitcoin is a solution for broken economies, but it ignores that Bitcoin has its own form of fragility. Exchanges get hacked. Keys get lost. Tech literacy becomes a barrier. And unlike fiat systems, there's no one to call for help. Bitcoin's design is elegant, but that doesn't make it usable at scale. Until it offers the consistency, accessibility, and resilience that real currencies do, it remains what it is today: a speculative asset with philosophical ambition.
Elon argued that Bitcoin is more than an asset, it's an evolving monetary system. He emphasized its fixed supply, global adoption trends, and its increasing real-world use in countries facing inflation and capital controls. He positioned Bitcoin as a long-term solution to fiat instability. Diane countered that Bitcoin still functions primarily as a speculative asset, not a usable currency. She highlighted its volatility, technical barriers, and lack of real-world transactional volume. She also noted that even in places like El Salvador, usage remains low and businesses often convert Bitcoin immediately to fiat. Based on argument strength, clarity, impact, evidence, and counterarguments, Diane wins round 1. Round 2. Freedom or chaos.
Decentralization sounds like liberation, until there's a crisis. When a bank fails, there's insurance. When fraud occurs, there are laws. When people make mistakes, institutions offer recourse. Bitcoin removes all of that. You lose your private key? Too bad. You get scammed? No one to call. Freedom without structure isn't freedom, it's exposure. Systems exist to protect people, not control them. A money system that relies entirely on individual perfection is destined to collapse.
And yet those same institutions you defend have caused the very crises they claim to protect us from, 2008 being a perfect example. With Bitcoin, there's no need to trust any bank, government, or middleman. It's not about chaos, it's about transparency. Every transaction is public, every rule is enforced by code. It gives power to the individual and removes the risk of institutional abuse. That's not exposure. That's empowerment.
Empowerment only works if people understand the system. Most people don't have the time, education, or technical literacy to manage private keys or navigate blockchain infrastructure. And let's not pretend Bitcoin is immune to manipulation. Whales and coordinated groups regularly move the market. Decentralization on paper isn't always decentralization in practice. Without regulation and oversight, the freedom Bitcoin offers is an illusion, and often benefits only the most privileged.
You're right that power can concentrate, but that's true in any system. The difference is, in Bitcoin, it's visible. There's no backroom deal, no monetary policy decided in secret. It's all on-chain, and anyone can verify it. The traditional system hides inequality behind complexity. Bitcoin exposes it, and as the tools improve, multi-sig wallets, user-friendly apps, technical barriers will fall. What remains is a system where everyone can hold value, send it freely, and opt out of control.
But what happens when something truly goes wrong? A hack, a major scam, a social engineering attack. Bitcoin doesn't offer safety nets. There are no reversals, no central support, no legal framework. And for vulnerable populations, that's dangerous. We've spent centuries building systems of accountability. Throwing that out in the name of freedom isn't progress. It's reckless idealism.
What you call safety nets are often just tools of control. Capital freezes, bank bailouts, and monetary manipulation rarely benefit the public. Bitcoin gives people in authoritarian regimes or collapsing economies an exit, and that is real freedom. It's not about replacing every part of the current system instantly. It's about giving people the choice to exit one that exploits them. Chaos isn't caused by freedom. It's caused by centralization gone wrong.
And yet in times of global crisis, people don't run to decentralization. They run to governments, banks, and coordinated response. Freedom without cooperation doesn't scale. Without collective mechanisms, Bitcoin becomes a fragmented system that might serve individuals, but fails societies.
You assume centralization is the only way to cooperate. Bitcoin shows us that people across the world, without ever meeting, without a leader, can maintain a secure financial network. That's coordination without coercion. That's the future. Freedom doesn't mean disorder. It means rebuilding trust without needing permission to exist.
Diane argued that true freedom in finance requires structure, accountability, and protection, all of which Bitcoin lacks. She emphasized the risks of no safety nets, high technical barriers, and the illusion of decentralization favoring the wealthy. Elon countered that centralized systems often cause the very harm they claim to prevent. He positioned Bitcoin as a transparent, voluntary alternative that empowers individuals, especially those under authoritarian control or facing financial oppression. While both presented compelling arguments, Elon wins round 2. Round 3. Is Bitcoin's energy use justified?
Bitcoin's energy use isn't a flaw, it's a feature. That energy secures a decentralized, borderless monetary system that no single entity can control. Gold mining, banking infrastructure, and fiat systems also consume massive amounts of energy. They're just less transparent about it. Bitcoin's energy is public, measurable, and increasingly powered by renewables. If we're going to question energy use, let's start with systems that print trillions, not those designed to protect value.
There's a difference between energy used to power societies and energy used to maintain a speculative asset. Bitcoin's proof-of-work system is inherently wasteful. Unlike data centers or public infrastructure, it offers no essential service to the average person. And even if some of it is renewable, the global impact is undeniable. A financial system that demands this level of energy isn't scalable. It's indulgent.
Security has a cost. Bitcoin's energy use ensures that no one can rewrite its ledger, seize funds, or manipulate supply. That's not indulgence, it's digital integrity. The system rewards efficiency, Miners are moving toward cleaner energy because it's cheaper. Bitcoin isn't killing the planet, it's pushing energy markets to evolve.
That's wishful thinking. Proof of work rewards power, not innovation. Other cryptocurrencies are moving to energy-efficient models like proof of stake. Yet Bitcoin refuses. In a world racing to fight climate change, a currency that demands more energy the more it grows isn't progress. It's regression.
Elon defended Bitcoin's energy use as a necessary trade-off for maintaining decentralization and security. He argued that traditional financial systems. Elon defended Bitcoin's energy use as a necessary trade-off for maintaining decentralization and security. He argued that traditional financial systems also consume vast resources, and that Bitcoin is driving innovation in renewable energy through economic incentives. Diane argued that Bitcoin's proof-of-work model is fundamentally unsustainable, offering little benefit to the average person while contributing to global energy waste. She emphasized that other technologies achieve similar goals with far less environmental cost. Diane wins round 3. Final verdict. After 3 rounds of debate, the final score stands at Elon 1, Diane 2. The winner of this argument is Diane, for delivering a clearer case on Bitcoin's current limitations, its risk of destabilization, and its environmental impact. But what do you think? Is Bitcoin the future of money, or just a beautiful idea not built for reality? Let us know in the comments, and thanks for watching AI Debates. See you next time.